Hi, good afternoon, everyone. This is Mark, and here to give a commentary on the markets. Today is the 8th of October 2014, and I'm sure most of you will know that I haven't been, giving, producing videos for about, I think, a month. And the main reason is because last month I had a pretty serious bout of flu. Okay, I think there was a flu bug going on, and I also had to prepare for my Shares H course foundations course at the end of last September, right, previous month. And yeah, it was a very good session with the people there, with my students, and they have learned a lot from me, lah, I presume, because I had very good feedback from their testimonials. Okay, and mainly is also because, like I said in the previous video, is like it seems that it's a more of a trading environment because valuations are not exceptionally attractive. Of course, there are some companies that have pretty good valuations, but they're getting more and more rare. Okay, and it seems that there's a lot of volatility in the markets nowadays. So that's why I said in the previous video, which is 1 month ago, right? I said that it's probably more of a trading environment where you need to adhere to your stop losses and probably reduce your trading sizes. And the market is like that. There's periods of environment where it's going to be difficult for you to make money, and it gets a little bit more risky. So you need to be able to identify this kind of what kind of period is it, and how does it affect your trading. All right, so let's say if you're trading the Singapore market and it's been sideways for the last half a year to a year, then chances of you making money is very slim to none. So you need to search for volatility in that sense. And then for the US markets, those periods where it starts to get very, very volatile, you also have to be careful. And you know that the spiders have been always hitting new highs. So there will be periods where you'll find that the candidates that you have or the ideas you have are actually lesser, and that's where you need to scale back your position. And sometimes even not trading is also a good idea. Lah. It doesn't mean that you learn trading, therefore you must trade every day. And it's a very dangerous assumption to have lah, that you can always make money constantly in the markets, because from my experience that's not really true lah. There will be environments where it's good and environments that's bad, and it's those times where it's difficult you need to reduce your size so that you will not lose a lot of your money back. Okay, and so let's take a look at the spiders now. Okay, so now the spiders, right, you can see it's broken down from a very long-term trend line. As usual, I don't really take a look at trend lines in the indexes, but just take a look at the 50-day. All right, so the 50-day you can see is actually slightly flat to downwards already. Okay, it's not really a confirmed down because the angle is not there yet. But the last few days has been quite volatile for the markets. It's been like down a lot from 198 to about 191-ish, and then up to 197.5, and then down now is at 193. So yesterday it corrected a lot because I think IMF cuts a global outlook lah, saying that the stock market is very frothy. That means a little bit on the high side. Okay, and you can just read them for fun lah, because at the end of the day you wouldn't know what will happen. It could just continue to go up and nobody would know. All right, but when IMF released such a statement, then of course the markets panic a little bit lah. Okay, and I think it's a normal pullback. Okay, from 202 now to 193. So if it continues to trade below the 50-day, okay, and the slope starts to angle downwards, probably in this angle downwards, then you have to be careful really lah. Because right now I'm not really initiating any new positions, because you can see that it's a bit uncertain in the markets now. So I'm not initiating any new positions. Of course, I may initiate some small little positions that I feel is worth it and it's good risk to reward for me. But generally, you have to scale down at least to at least 50% to 75% of your positions lah, because the outlook is very uncertain in this trading environment now. Okay, so S&P right now, I'm nothing much to be said. Okay, so just be careful. Okay, moving forward, and if you can always stay in cash if you're in doubt. All right, staying in cash is also a very good idea, because when there's better opportunities later down the road, you can use them for better risk to reward trading decisions. Okay, and okay, so some of the stocks I traded the last month, which is very little. Okay, I traded eBay. Remember eBay, I traded from 49.39 to this 56.50, all right, to 54.50, and then you see this white price bar up now, up there, okay, and I took profits along the way, all right, and my very small position left will be around here lah. Okay, so I got out all after it broke the trend line here, but the last time when I talk about eBay is that when there's a big price bar up here with huge volume, then I think you have to consider to take some positions off lah. Okay, this is a sort of a secret that I'm going to tell you now. Okay, so when you see anytime you see a white price bar and a high volume on an uptrend, then you should be careful of the market of the particular stock itself. Doesn't mean that it cannot go up, but the odds are much lower. Okay, I don't know, it could be liquidation from the institutions or what, but it's a pattern that has been recurring for quite frequent lah. Okay, so let's say maybe you can see this price bar which is quite wide with a high volume, and you can see the price actually retrace. Obviously, at the end of the day, you don't know how far you retrace. Okay, but let's say if you have a call position around the 50s and then it starts trading upwards, and then you suddenly see high volume. Okay, suddenly you see high volume with pretty wide price bar, then it pays to actually take off some portion of your position, all right. And this is something that I've learned for many years. Okay, obviously I teach my students more, but generally this is what you're looking at. Okay, so when it comes down again, all right, I actually entered around $52.30 and put a stop at 51, and it just so happened that there was very good news. I think last week, or was it last week? Okay, this was on the 30th of September. Okay, so which is last month end, and eBay said that they want to spin off PayPal lah. Okay, so that's why the price suddenly surge, gap out and surge, and then you can see the high volume again here. Okay, high volume again here, and so you got to definitely take at least half. Alright, or at the very minimum 1/4 of your position out, which I did lah. I took about half to 3/4 off, and I got out the rest somewhere in the middle here, which is 54.50. Alright, so in the market, don't try to guess where it's going. Okay, when you feel that the market is giving you opportunity to get out, sometimes then you have to take it. Of course, it comes with experience lah. Okay, but this is something that you can write down and keep in your notebook or something, that further down the road, if anything such like this happens, right, then what you can do is you take a portion of your profits. A lot of students ask, hey Mark, when I see this price bar up, right, I felt very greedy. Okay, which is normal, because suddenly you see such a big price gain, you hope that it will continue to go up. Okay, but at the end of the day, you wouldn't know. So the best thing to do is to actually take shave your position off a little bit, or take some profits in a span of 1/4 position and a half position, then you will be more stabilized lah. Okay, because you cannot cheat or lie to yourself lah, because for the chance of it to continue to go up is definitely very rare, especially for a stock like eBay, which is actually a big cap stock. It's unlikely for it to continue to go up when there's a huge price, wide range bar and high volume. Okay, so this is something you can take a look at. So anyway, if let's say eBay comes down again and there was a short-term momentum turn, then I may consider getting in again, and I think my students should consider getting in also lah. Okay, but just reduce your position size to maybe 25% of your original size, because now the S&P 500 is not showing signs of stabilization yet. So something to be aware of. Another stock I traded was NRG. Okay, this is kind of a mid cap to a smaller cap stock. So I can see that you can see it came from $38 down all the way to 29. So when it started to turn after earnings, my entry was 29.68 with a stop below at 28.9, and I took about half here. Okay, 1-to-1, and then it stopped me out at break even lah. Okay, stopped me out at break even for the remaining position. So I made a very small profit here. Okay, but you take whatever the market gives you at the current point of time lah. And you can see most of the stocks are actually for the last month not been doing much. Okay, you can see a lot of oil stocks, like this is an oil and stocks company, so like Conoco, like NOV, all of them have been correcting quite a lot lah. Like even ExxonMobil has been coming down. So I like it when stocks are coming down. I know it sounds weird, but this is what I feel lah. When stocks are coming down, then the opportunity will be there to make more profits. Because if it's high and you try to buy higher, which definitely is a good case to talk of, because most trading books tell you to buy high and sell higher, which is true. But I think it's only true to a certain extent, okay? Because if you know that in terms of a valuation wise, or you see such a huge run up here, okay, like from 83 to 100, would you want to buy higher? Most likely it's not lah. Obviously, if you're looking in terms of more of a mid cap position, then maybe it has the potential to continue to go up because the room for growth is higher. Okay, so you need to know what kind of stock you're trading. So like ExxonMobil, if let's say it ran up so much, even here, I wouldn't want to long it too much. Alright, because I know that the rough valuation of the stock, there's a nice range to it. You wouldn't want to try to exceed your range. Okay, so ExxonMobil now is actually coming down from about 104-ish. Now it's about $93. Okay, and I'm actually quite interested in this stock. So when it turns, I may start to get in a chunk of my position. Okay, maybe around the $95.34, identified on the smaller time frames. And this is an old trade which I have to take out already. So hopefully, I would like to see something a little bit like the formal during last year end, okay, from December to mid Feb or early Feb, something a little bit like this. Then it starts to turn, and then I can enter on a very low risk basis somewhere around here, okay, around this region. So hopefully I can see a repeat of this, okay, and then we can make a little bit money from ExxonMobil also. Okay, next one would be RSG. RSG, if you actually take a look at insider buying, there's tons of insider buying on this stock. Okay, it's actually bought a lot by this Bill Gates fund manager, which is Cascades Investment, and they've been pumping a lot of money in this stock, which around the 38, 39, all the way from 35, 36, 37, even till 39, 39.50. It's been pumping a lot of millions of dollars inside this stock. And I don't know why. Okay, anyway, this is a waste management company, but it seems very interesting because it's not a very big cap stock. I think it's about, let me take a look. Right, that's the Google.com. Okay, so RSG is about 13 billion, so it's not really exactly very big. So I would say it's mid cap. So definitely, if somebody want to take over the company or whatever, then there is potential for this stock to be bought over or whichever lah. Or maybe it just continues to be accumulated by the investment community. So I think RSG also has potential. Okay, but I have to identify on a smaller time frame whether to get in or not lah. But as usual, because the 50-day is sloping down, I'm not going to go in so much of the position. But this is an interesting opportunity. Another one of my favorites is United Health. United Health right now, I've traded from $81 all the way. Sorry, let me just get. So I traded from here. Okay, actually it's around this. It's too big a zone. Let me just. It's actually here. Okay, and I took some 1/3 here. I took another 1/3 here. And I didn't manage to take this last 1/3. I think it didn't really hit my price that I set. So when it came down, right, and hit my break-even stop loss, then I'm out of the full position. So right now it's a nice pullback. So I'm looking for a long at this point also. Okay, because healthcare stocks usually are a little bit more defensive around this period of time, and it seems that this stock has been quite good to me lah. So for the past 1 year or so, it's been giving quite a lot of consistent buys with a good probability, and you can see the moving average is the 50-day is still actually in a neutral position. So I think it can pull back a little bit more. Right now, the pullback I think is not as large as I would expect it to be. Now it's about only 38.2%, and probably more towards the 61.8 to 78.6 on near the trend line. Then I may take a little more serious look at it lah. Okay, but I'm also actively stocking this stock. So let's say if you're trading and you know a few certain stocks, right? Maybe you like to trade Apple, or maybe you like to trade Microsoft, or you like to trade Citigroup or BAC, whichever, then you have a sort of a feeling of how the stock moves and the gains and the rewards that it can give you. Then it could actually be a better thing than if you trade everything under the sun. Okay, and it pays to know the stock that you're trading very well, so that it can help you in your analysis also. Okay, so this is United Health. And another one I'm looking at is IBM, because IBM has actually came down quite a lot from 195. Okay, so I've traded this move upwards, okay, and took off some profits. I can't remember where, because this is an old trade, but I'm starting to look at it again because you can see it actually hit the 786 right here. If you are very aggressive, you can actually enter here, but I wouldn't bet on it. Maybe probably towards the end of October, I'll look at it again, because I think it has maybe a little bit more continued downside on this stock. But then again, if you like this stock, 185 is not a bad price to get in anyway. But for me personally, I would like to see it come down a little bit more. Maybe do a force breakdown or something like that. Then I may try to get in again at a actually better price. Alright, and the last opportunity is I think NOV. You can see the oil stocks are all coming down very fast, which I think is a good opportunity, because you can see that there's quite a lot of support around here, X support in past over here. Okay, got resistance, and then it broke out. Now it's coming back down to the same price. Obviously, I'm not asking you to long here. You still need to go down to a lower time frame to spot a little bit of a momentum turn first before you get in. That would be the safest. And why are you going down to the shorter term charts? Is the main reason is actually because it's to reduce your risk, so that your stop loss won't be so big as from the daily chart. And sometimes daily chart, if let's say a price bar like this one, okay, let's say a price bar like this one, which is quite big and long, then if you enter the next day, then you'll be giving out a lot of gains, okay, and you may not be in a good risk to reward position by the time you're here. So let's say if you, instead of you enter the next day here, you enter around here, okay, maybe in the middle of the day you entered here, or the early part of the day you enter here, then it will be a much better entry point. That's what I would feel. Okay, obviously not everybody can monitor a smaller time frame chart on the US markets, but those who can, I strongly encourage to learn a little bit about this. Okay, so right now NOV is coming down, and I'm looking for the turn, but don't try to catch the falling knife. Okay, you wait for it to show some strength on those smaller time frames, then you try to take a bet on the stock. That will be much more prudent with a very tight risk to reward ratio. Okay, so I think this month is going to be, there's a lot of opportunities in quite a lot of stocks that I'm looking at. I'm not going to say all of them, okay, but generally I think there's a lot of opportunity. But unfortunately, because the S&P 500 is in a downward motion, I probably will only take about 25% of my usual position instead of the 100% size that I'm going into. Okay, and if it keeps going down, the S&P keeps going down, then you have to go into all cash and wait for a better time to enter the market. Okay, so this is the way it is. Unless of course you are value investing, then by all means you can still do your value investing, but also probably at a reduced size. Or if you have a very good understanding on the company and you have done your discounted free cash flow and your analysis and you like it, then by all means you definitely can. Okay, those are fundamental analysts out there. Alright, so for those who are first time viewers or who have not signed up with my newsletter, you can just go to sharesage.com and then you just put in your name and email address, and I will send the videos to your inbox. Okay, and sometimes I have deals which I will also send to your email. If you're interested in the next program, which I just completed last month end, okay, you can go to program and you can view the curriculum details, the brochures, and what I will teach, and some of the testimonials that I have. Okay, and if you want to book the next one, course will be on the January 10th of January next year. Okay, I rarely hold my courses every month, so maybe about once a quarter or maybe even longer, and it'll be 888. There will be 10 spots. Okay, if you're interested, you can just click book and enter your full name, email address, your mobile number, and you can pay by PayPal. or if you want to pay later through internet banking or through a check, then you can choose pay later lah. Okay, and I think this thing is quite cool. I just put it in. I think it's a little bit more convenient than Eventbrite because straight away you can make a booking here. So just giving it a try. So if you like it, please sign up. I think it's a very good education for you guys to moving forward lah in your trading, or let's say if you're trading or investing. They are both a very good solid foundation for you to actually start making money in the markets. Okay, so I think that's all. Thanks for your time. It's a slightly longer video this time because I haven't been doing for 1 month. And if all goes well in the market, then I will actually talk a little bit more next week. All right, thanks.